All right, guys, welcome back to the channel. This is a bit of a trading tip Tuesday, as I like to call it. And I just want to share with you a couple of things that we've been looking at for a while. And I like to share things in, not in hindsight. I like to share things that you can actually follow along to, transparently, so that you can't say, well, you only share your winners, as you know, right? So I want to give you something useful that you can go and look at, use your own discretion, use your own analysis, use your own technical abilities to then follow it along and say, well, maybe if I did this, and you can actually glean something from it and benefit from it in the long term, rather than just showing you a winner and, look how good I am kind of thing. So one of the things that we've been looking at in my live trading sessions is the pound dollar. And yes, we've been in a bullish movement, but we are just seeing this, following this prediction we did last week. We've broken out, we've put in a new high, and we're pushing up to, looking left, this level here, which just so happens to be the support level or the mid zone of a compression channel breakout. And what's really interesting is at that 1.3 flat level. So we've got an even handle number, which we all know, these psychological numbers, they're all respected. Many of them are respected in the markets. Why? We don't care. They just are. It's a bit like when you put your petrol in the car and you don't want to go over the rounded number and you go over 2p or 2 cents, and you have to just make it up to 50 or, to the pound or whatever, or to the dollar. That same thing plays out in the markets. There are psychological even handle numbers that are respected in the markets. For whatever reason, we just don't care. We just know that human psychology just does the same thing over and over again. So that's what creates some of these patterns that we can see that are replicatable and repeatable over and over again. So that's what we want to jump on. We want to build high probability rules around those things that happen. And although we're in a bullish move here, one of the things that's on the radar is a deceleration, or a temporary rollover in the market. Okay, so a little bit of a relief rollover here. If we approach this level at 1.3 flat, we are likely to see a rollover, right? Now, what else plays in favor of that is the fact that we've got this nice strong bullish movement. We know that if we have strong bullish movement before that level, it doesn't go on forever. These bullish moves, these runs don't go on forever. We're likely to see some deceleration, market run out of steam. We're likely to see the market roll over for a bit, okay? A little correction before we continue up, if we're going to continue up. So we're seeing bullish movement. We've got 1.3 flat, also happens to be major structure level that's been respected in the past at that compression channel. It's the last level of structure on the daily time frame. Look, we had all this looking left, so we had all this room with no structure or no support or resistance at all, right? The path of resistance is clear. So we're pushing up, and then we hit 1, 2, 3 tests of 1.3 flat. Support should become resistance. Structure leaves clues, look left. So as we approach this level up here, that's where we're going to be looking for that level to potentially see some resistance. So it's about patience pays the bills, right? Now, if you are, if you're trying to think like as many other traders as possible, one of the things you're going to be looking at is confluence. So you could use things like, well, if this is likely to extend to that level, is there anything else that I can combine with that thesis that is going to add water and weight to my prediction to give me a higher probability? So one thing that we use, or one thing that's very popular in the trading world, is a Fibonacci extension tool. So a Fibonacci extension tool will give you a set of ratios that are also respected in the market. Now you can see that when we extend out here, can't really see this because, here we go, let's move this sideways a little bit. That 127 extension just so happens to be, if I just line this up with the previous low, right at that 1.3 flat level. Okay, so we've got that 127 extension, which is the high probability Fibonacci, lining up in that zone as well. You can take that a step further, and you can also use the Fib extension as an inversion from this low to the previous high and back down. And not to mix this up and make it all cluttered, but you can see at the top of that zone, we've got the 1618 extension for the inversion. So all of a sudden, we've got this real narrow zone here that provides us with a lot of confluence and a lot of confirmation that there's likely to be a reaction at that level. Okay, so we've gone from anywhere in that zone to pinpointing a very narrow zone so that we can then start to look for a trade idea, okay, or a trade signal. So now we're going, right, we've got to wait a little bit because patience pays the bills. We're not quite at that level yet. And depending on how much confluence and confirmation you get and how many indicators and filters you use will determine your level of aggression into the trade. So you could say, well, if I've got, previous structure, certain structure, price point, a pivot level, maybe you look for Fibonacci, and you could build this scoring system and you say, if I get 5 points or 6 points, I can just enter a limit order. If I get 4 or 3 points, I have to wait for a 3-bar reversal. If I get 2 points, then I need to wait for a double top. And for the double top, I can look at another time frame, a lower time frame, so that I get the opportunity quicker rather than waiting for it on a daily. Okay, so think about your trading system as this kind of a rule book based on probabilities and aggression. Okay, and risk reward profiles, of course. Or risk reward profile is going to depend where your target goes. And again, as much analysis needs to go into your target positioning as it does your entry. It's no good being right if you can't hit the winner. Okay, you need to, every order is an order. I always say this, every order is an order, which means as much analysis and as much effort needs to go into your stop loss, it needs to go into your target as it does your entry, because it's all a reaction based on what other participants are doing. So you want to get out before you're being greedy and you're stuck in the trade longer than you need to, paying rollover costs and all that kind of stuff, or even it ends up reversing and stops you out. And you also want to put your stop loss at a level that's going to get you out as quickly as you know you're wrong and you've accepted a loss, but also give it breathing room so that the market can move a little bit and you don't get stopped out too often and then it hits the target, which is obviously a pain. And you do that by putting emphasis and attention and effort and analysis into every single order. Okay, so where I've just used all this confluence for this entry order, you want to be doing that for where you put your targets and where you put your stops. But for now, we're just talking about the entry on this because this is a way off. So we're not in the trade yet. So we don't know how the market's going to move. But if we do push up, one more thing you can look at is the RSI. The RSI is conventionally considered overbought at 70. We're at 69.2 now. So again, if we push up here, we could start to see RSI. You might look at a double top and all the rest of it. One other thing you can look at is an ascending channel at this level. And again, you might look down at a lower time frame. But just to let you guys know that right now, what I'd be looking at is a potential short here and not a reversal. I wouldn't be looking for greedy targets. It's just a quick in out. And I'd be looking to get in somewhere in here with optimal stops, tight stops, and targets no more than previous structure. I want the path of least resistance to my target and the path of most resistance to my stop. And if we look left, we've got strong levels of support here, which should provide a good path, like a strong path of resistance to my stop loss. And when you can do that and you approach every trade that way, you're going to come out on top as long as you can maintain consistency. The other setup I want to let you know about is the euro dollar. Although this isn't, this is just a big consolidation zone on the daily time frame. We had this flag pattern, which we broke out of. This is one of our predictions last week. And we're now approaching this level. Now, again, 1, 2, 3 levels tested. If we push up to this level following this big bullish run, 1, 2, 3, 4 big bullish candles, RSI we start to look at. We start to look at price action patterns. We start to look at deceleration. And up in this zone, we can start to look for a similar setup, okay? So I'm not going to talk too much about this one. You guys can go and do your own analysis. I'd love to see in the comments what you've come out with on this, and ideas and confluence and confirming factors that you're thinking like the mass market, the collective market mind, and see what you can come up with to give yourself a real high probability. This is my challenge to you. Go away and think how you can approach this as a professional trader, getting the highest probability setup only, okay? And you build a scoring system, and you only want to take those high probability setups. Go away and do that. Let me know in the comments what you've come out with, and we'll take a look at these. That was Trading Tip Tuesday. Hope you enjoyed it. Let me know in the comments what you're looking at, and good luck in the markets this week. Take care.